Hey bro, Sam here. A lot of you have been asking Sam to share how he trades. So, on this channel, Sam will explain everything in a simple, clear, and straight to the point way. Sam will also show you the tools Sam personally uses to enter the market. Before we jump into live market examples, let me first explain the tools I use. Sam only uses three tools in the market. First, MTF, or multiple time frame analysis. Second, the engulfing pattern. And third, trend lines. I'm sure you're already familiar with these three tools. All right, now let's start with the first point, the engulfing pattern. There are only two types of engulfing patterns that I regularly use, bullish engulfing and bearish engulfing. I'll start with bullish engulfing and how to mark it. A bullish engulfing happens when a bearish candle is completely consumed by a bullish candle. From the highest wick to the lowest wick, everything is fully covered. So how do we mark it? Simple. You just mark the bearish candle that gets engulfed from the highest wick to the lowest wick. That's it. Simple and clear, right? Now let's move to the next one, bearish engulfing. If bullish engulfing is a bullish setup, bearish engulfing is the opposite. A bearish engulfing happens when a bullish candle is fully consumed by a bearish candle. From the highest wick to the lowest wick, everything is completely covered. The marking process is just as simple. You only need to mark the bullish candle that gets engulfed by the bearish candle. Very easy, right? Now let's move to the next tool. MTF, or multiple time frame analysis. MTF is very simple. We first identify the market direction from higher time frames, so our entries on lower time frames have a clear direction. Sam usually starts from the daily time frame, then moves down to H4, H1, M30, and M15. These are the time frames Sam uses most often. For entries, Sam usually enters on M30 or M15. You can enter on M5 or M1, but lower time frames often have a lot of noise. That's why Sam prefers M30 and M15, cleaner and more reliable. Why is this important? Because when the higher time frame direction aligns with the setup on the lower time frame, that creates strong confluence. We're not trading against the flow, we're trading in the real market direction. Now let's move to the next tool, trend lines. Sam uses three types of trend lines, trend line buy, trend line sell, and trend line breakout. Let's start with trend line buy. A trend line buy forms when the market is in an uptrend and price keeps bouncing from the same area along the trend line. Every time price pulls back and touches the trend line, it bounces upward again. This shows that the market is strongly bullish. These bounces become additional confluence to confirm market direction. As long as the trend line is respected, the market is likely to continue moving up, and that area becomes a good place to look for buy opportunities. Next is trend line sell. If trend line buy appears in an uptrend, trend line sell appears in a downtrend. In a downtrend, price keeps bouncing from the upper trend line. Every time price moves up and touches the trend line, it gets rejected and moves down again. This shows strong bearish pressure. As long as the trend line is respected, the market is likely to continue moving down, and that area becomes a good place to look for sell opportunities. Now let's move to the last one, trend line breakout. This one is very simple. When price breaks through a trend line, it's an early sign that market direction may be changing. For example, if a bullish trend line is broken to the downside, the market may be shifting from buy to sell. And if a bearish trend line is broken to the upside, the market may be shifting from sell to buy. Sam uses it in a very simple way, no complications. We just observe whether the trend line is still respected or already broken. If it's broken, we know the market direction is starting to change. That's how Sam reads market direction, simple and practical. Now let me show you some market examples. This is a bullish engulfing example. A bullish candle fully consumes the previous bearish candle. Very clear and easy to recognize. Here's another bullish engulfing example. Same concept. A bullish candle fully engulfs the bearish candle. That's how Sam identifies bullish engulfing. Now let's look at bearish engulfing. In this example, the bullish candle is not just engulfed by one bearish candle, but by two bearish candles. As long as the body and wicks of the bullish candle are fully covered, it's still considered a valid bearish engulfing. Simple and easy to spot. Here's another bearish engulfing example. Same concept. A bearish candle fully consumes the previous bullish candle. Clear and easy to identify. And now, this is the part you've been waiting for. Sam will now explain how all these tools are combined in the market, from analysis to identifying confluence and finding an entry zone. Sam will explain it briefly, clearly, and according to Sam's own trading style. So, let's dive in. Before entering any trade, Sam always starts by looking for engulfing patterns, whether it's bullish or bearish engulfing. Why? Because for Sam, an engulfing pattern represents momentum. It's a signal that an opportunity may be forming, either buy or sell. Sam always checks higher time frames first. The higher time frames Sam uses are daily and H4. Why those two? Because for Sam, daily and H4 are the strongest time frames to define market direction. For example, if Sam finds a bullish engulfing on H4, the first thing Sam does is mark the engulfing area. Once it's marked, Sam already knows the potential market direction. You still with me, bro? Next, Sam drops down to H1 to see what's happening there. This white box on H1 represents the engulfing zone from H4. Can you follow so far? On H1, Sam looks for additional confirmation. Sam wants to make sure the market truly wants to move up. And it turns out there is also a bullish engulfing on H1. This strengthens the bullish bias even more. Sam then marks this new important area. But this is still not enough. Sam needs more confluence. One confirmation alone is never enough. So before going to a lower time frame, Sam first identifies what else exists on H1. Look here, there are two support levels. If we draw a trend line like this becomes additional confluence. This is what we call a trend line buy. Why? Because the trend line connects two supports and is located near the bullish engulfing area. The assumption is simple. When price touches this trend line, it has a high chance to bounce upward. Now, how do we make this setup even stronger? Easy. We look for another trendline confluence. Here, we see a resistance that gets broken. Just draw the trend line. This is called a trendline breakout. And this breakout trend line is also close to the bullish engulfing area. This makes the buy zone much stronger. So now we have strong reasons to enter. First, multiple time frames. Bullish engulfing on H4 and bullish engulfing on H1, double engulfing. Second, trendline buy and trendline breakout. These factors together give us confidence to take a buy entry. Got it? Because this video is already quite long, we'll continue in the next video. In the next video, Sam will explain everything in more detail and more depth. Sam hopes you can understand and learn from this. Remember, brother, study first and don't be lazy.